Attention! The content of this video is for informational purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. We are on December 12, 2025. Imagine this scenario. Ripple has just received conditional approval to launch its own national bank. Yes, you heard that right, a bank. XRP ETFs are breaking volume records. The regulatory landscape has never been cleaner. On paper, XRP should be on its way to the moon, right? Wrong. The chart is bleeding. The price slammed into a concrete wall at $2.20 and refuses to move higher. What is going on? Why are the best headlines of the decade producing a technically bearish structure? Today, we're going to dissect the bombshell FXEmpire report that just came out and understand why the market is playing a cruel trick on investors. I am RC Invest Global, and my mission here is to separate signal from noise. Before we dive into this paradox, smash the subscribe button and leave a like. The algorithm needs to know you want the raw truth, not just recycled hype. Let's get into it. The maturity paradox. Let's get straight to the point. The FXEmpire report highlights something many influencers refuse to admit. Ripple achieved what once seemed impossible: approval to operate as a bank, an institutional success through ETFs. Yet, paradoxically, XRP is trapped in a bearish structure. How is this possible? Most people see the crypto market as a casino. Good news hits and everyone bets on green. But Ripple is no longer a garage startup. By becoming part of the banking system, XRP starts behaving less like an explosive meme coin and more like a mature banking stock. The market had already priced in this victory. What we're seeing now, around $2.20, is not just technical resistance, it's buyer exhaustion from those who bought the rumor. Those who bought expecting the bank are selling now that the bank is real. It's the classic sell the news, but on an institutional scale. The report clearly states that despite gold standard fundamentals, the short-term outlook points to a correction. If we don't break $2.20 with volume, the path of least resistance is down. The macroeconomic trap. But don't look at XRP in isolation. That would be a rookie mistake. The FXEmpire report cross-references this data with Federal Reserve rate cuts and forecasts for gold and natural gas. Why? Because institutional money, the kind that moves XRP ETFs, doesn't live on crypto alone. If the Fed cuts rates, the dollar weakens, which generally benefits risk assets. But note the nuance: gold is rising. When gold rises while rates are falling, it signals fear, not greed. Big funds are hedging. They are using XRP as diversification, yes, but they are not going all in. The liquidity that could be pushing XRP towards $3 or $5 is currently being redirected into safe havens like gold or rebalanced within the Forex market. The bearish structure in XRP is in part a reflection of a cautious global market that prefers to wait and see. The technical reality: where is the bottom? Now let's be surgical. Forget emotions. The chart tells us that the $2.20 zone has become a brutal psychological barrier. FXEmpire's technical analysis suggests that if this breakout fails, XRP could revisit much lower support levels before regaining strength. Is this bad? It depends on your strategy. If you're here for a quick weekend flip, this is terrible. But if you look at it with institutional-level cold logic, this is an accumulation opportunity. Ripple having a national bank means XRP's utility is no longer theoretical. It's real. Money will flow through the network regardless of today's token price. The so-called bearish structure is a test of patience. It's the market shaking out weak hands before real utility kicks in. Final verdict: the transformation. So, what's the takeaway? The December 2025 report shows that XRP is in a painful transition phase. It has moved beyond being a purely speculative asset and is becoming global financial infrastructure. Infrastructure growth is slow, boring, and sometimes pushes prices down while foundations are being laid. My view here at RC Invest Global is counterintuitive. This FXEmpire predicted pullback, even amid good news, is the healthiest signal we could get. It shows the market no longer reacts to empty hype and now demands real results. If the price drops in the short term, remember this: the bank is approved, the ETFs are live, the game has changed. The real question isn't whether XRP will go up, but whether you have the stomach to endure the dry spell while Ripple builds the new financial system. Let me know in the comments. Do you think $2.20 gets broken this year, or do we see a deeper correction first? I want to read your theories. Don't forget to subscribe to stay one step ahead of the market. See you in the next video.